Good morning, everyone. This is Tony Butler with Insurance Agency Marketing Services. I'm one of the life sales directors here, and I want to thank you for joining Mike Carsello and myself. Mike is with American National, and what we're going to be talking about is IULs and how AG 49 has affected IULs in terms of how it's being illustrated. What we're seeing a lot of these days is a lot of agents are writing a lot of IUL business because they have clients that are looking for other ways for income during retirement. So with that, let's get started here real quick. A few insurance agency marketing services information I'd like to share with everyone as far as what we provide for you, the agent. One big thing that we do offer is the new producers builders. That is for agents that have just signed up with IAMS, gotten appointed, and start submitting business. Based on the business that you submit, we have different levels that you can try and reach. We have the 100, 250, 500,000, 750, and 1 million levels. And what those levels are, and that's paid premium, where you can get additional perks, if you will. That can come from 1,500 piece postcard mailing to 3,000 piece mailing. There's retirement boss radio that we offer. There's some other things that we offer, like Ritz-Carlton package. If you're an annuity producer, we've got preset annuity appointments that we could do for you. So as you see, there's a lot of additional perks that are available to you. And if you have any questions in regards to what we offer, please do not hesitate to give us a call. Be more than happy to discuss this with you in greater detail. Next, we also have the IAMS Business Builder. The Business Builder is more of a referral for you, the agents, meaning if you refer an agent to IAMS and that agent gets appointed with one of the carriers that we work with, we will provide you with a $50 one-time referral bonus. Any subsequent business that they write, depending on the business, we do provide you with a bonus on that. So if they write any life, index annuity, single premium life, or MIGAs, as you see here, there's additional spiffs, if you will, that you would get paid on. It doesn't take away from their commissions. It's just our way of saying thank you for providing the referral to us and us getting additional business. If you have any questions regarding that, again, give us a call. What we like to say here is we want you to work smarter, not harder. So we do offer back office support for you. So we're here all the way from submission to commission. So we do have paperless contracting available for you, top sales expertise and coaching. Forms are available at your fingertips via our website. We do help you with case design as well. In saying that, we have a couple of platforms that's available for you for electronic applications. I'm sure you're aware with the current pandemic situation that we're going through, there's a lot of not being able to get in front of clients. So we've got a couple of platforms that are available for you to do electronic applications. One of those platforms is Firelight. Now, Firelight, as you see here on the left, these are the carriers that are available to you. And the ones on the right are carriers that we're working with to add to Firelight. You can get registered on Firelight through our website. If you have any questions as far as registering to Firelight, you need a tutorial as far as how to walk through that platform. Any of our sales directors would be more than happy to help you with that. We also have a creative marketing solutions department, and that department will help you whether it's turnkey, agency, or digital solutions. What that means is if you need assistance or you're looking for additional information as far as handouts that you want to do, newsletters, you're looking to redesign a logo or actually get a logo design, you need help with business cards or brochures. They can also help you get into the digital marketing space, whether it's personal website assistance, digital marketing strategies. Jacob Tedlock and his team are great at doing that. Just reach out to one of your sales directors for assistance, and we can definitely help you in that regards. I'd mentioned that we had a couple of platforms as far as electronic applications. Another one of our platforms, or the second platform, is iGo eApp Solutions, which you can find via the IAMS website. Our website also provides you with excellent sales tools. If you're a life agent, you can do term quotes as well as universal life quotes, and we've added index quoting comparison as well. We do have current annuity news available, annuity grid, long-term care information. There's a wealth of information that's available on our website. So if you have any questions regarding getting registered to the website, need assistance in navigating through the website, again, feel free to give me a call. Be more than happy to help you through that. We also have a retirement analyzer available to you, and we do offer that on a 30-day free trial basis. The retirement analyzer is there for you to answer questions from your client, such as, can I continue my present standard of living into my retirement years? How would it affect my family if I were to enter a nursing facility? What are the possible solutions if my situation changes? You can paint a broader picture for your clients with the analyzer. We can definitely provide you with additional information and let you know how that works. Again, it's a 30-day free trial basis. There's a cost after that. Depending on how much you're producing, we can still offer that free of charge. So if you have any questions regarding the retirement analyzer, again, give your life or annuity sales director a call. Be more than happy to help you with that. We also have the IAMS Wealth Management Team, and that wealth management team is there for your higher net worth clients, those individuals that have higher net worth as far as more money in regards to, let's say, maybe investing. This department can help you increase your revenue, improve client retention, and strengthen your relationships with your client. Charles Jr. is head of the IAMS Wealth Management Team. So you can reach out to him or anyone on the team, and they'd be more than happy to let you know what they can do for you for those higher net worth clients. If you're familiar with IAMS, you're familiar that we do have a Life and Annuity Academy, which is a 2-day training, which includes different sales ideas and strategies that we bring to the table with some of our top producers. We do talk about large life case marketing. A lot of times we will partner with some of our top carriers and provide you with information from a carrier perspective in terms of the products that they have available. With COVID, we haven't had an opportunity to have Life and Annuity Academy recently. We're discussing maybe possibly doing something virtually. When things change, we'll definitely look at setting something up in 2021. But if you have any questions on the Life and Annuity Academy, again, feel free to give us a call. And with that, Mike, you there?
I am here.
Okay, I am going to switch you over
Okay.
to presenter. There you go.
Perfect. Thank you. All right. Well, good morning, everyone. My name is Mike Carsello, and I'm with American National. Wanted to thank everyone that could jump on today to cover our Index Universal Life product, and also AG49 and how that relates to our product and others that you'll see around the industry. So definitely some big changes with the AG49 regulation, but the good news is you know, for the most part, our product will remain the same. It's just going to be based on how the product is illustrated as where you're going to see the major differences. So what we will cover today, we'll just do a general overview of our Index Universal Life product, and we will cover some of the common features of the product. We're also going to discuss our crediting strategies with our product as well, and this is where AG49 will definitely be tied in here during this topic. That's where you're going to see most of the effects of the regulation take place, is with the crediting strategies on the product, primarily how the product is illustrated. And then we will also cover a few sales ideas towards the end, and we will also discuss our illustrations and how to kind of go through our illustration and see the major differences with the new AG49 quote and how that and what to expect. So for those of you that aren't familiar, what exactly an index universal life product is, it's pretty much just a life insurance contract that has a more aggressive element for cash accumulation. It does have a tax deferred growth cash value associated with this. It does have flexible premiums, so you can basically customize how the product's funded. Also offers volatility protection, so any kind of crash in the stock market or anything like that is not going to decimate the cash value with this product, as we do have a 0% floor. And also, more importantly, as long as that index universal life is funded, it will have a cash value. So in case the unfortunate does happen, there will be a death benefit left over for the beneficiaries. So some of the common features with our index universal life product is the flexible premiums. We do have 3 death benefit options with our index universal life. We will cover those here shortly. We do have multiple benefits and riders with this product, which also includes our living benefit riders for the terminal, chronic, and critical. We also have a 10-year no lapse minimum guaranteed premium feature, which basically, as long as that minimum premium is paid with this product for 10 years, it will keep that policy in force for a minimum of 10 years. We do have unisex options, which is kind of ties into our pension program that we have at American National. Not many carriers actually have a platform like what we do at Anico as it pertains to retirement accounts, and we do have a unisex option with our IUL product, in which we can use tie this into 457 plans. More importantly, we do have loan availability with our product for fixed and variable loans, and we will kind of discuss the differences of those two. And we also have 5 crediting strategies that we'll go over. More importantly, like the multiplier strategies with this product, which are very important, and they are probably the most hit by the AG49 regulations. But not to worry, there is good news with that, and I'll cover that here shortly. Also with this product, minimum face amount of 25,000, so very low minimum to start at the contract. We do have issue ages that go all the way up to 85. We have male and female gender classes available, as well as our unisex option, which is primarily used for our 457 plans. So as I mentioned, with the flexible premiums, customer does have the option to change the frequency in which the premiums are paid. They can change the amount in which they are paying. They could increase the premiums they're paying to help, really pump cash into that policy so you can maximize the loans at a later date. Or if they want to, they could also decrease the payments with this product. So there are multiple options in which they could choose to fund this policy. We do have 3 death benefit options available with this product. We have our option A, or level death benefit option, which as the name entails, it's just a level death benefit. We have our option B, increasing option. So you will gradually see an increase in death benefit over time. And we also have our option C, or return of premium death benefit option. Now, as far as illustration purposes are concerned, and I want to kind of go over an illustration at the end of the presentation to kind of explain to you how this is important as it pertains to maximizing that loan amount when you're trying to structure an IUL illustration to show some type of retirement income. It's very important to start out with an option B and then have it switch to option A when you start that income stream with our IUL illustrations. And I will go into further detail on that here in a little bit. Also, that's another important feature with our product, and this is really with all of our products across the board, including our guaranteed universal life and our signature term and our whole life products, is we offer terminal, critical, and chronic illness accelerated benefit riders for no additional charge. They are absolutely free with all of our policies. So you have, as long as you have a minimum death benefit of $50,000, you're going to have both your terminal, critic, and chronic illness riders included onto your policy for no additional charge. If it's under $50,000, you will have the terminal illness rider included only. So these are absolutely free. Very important in the COVID world that we live in, that and especially a lot of carriers charge for these. We include them with our live products absolutely free. Also available with our IUL product is we have an overloan protection benefit. We have our disability waiver of minimum premium, disability waiver of stipulated premium. We also include our children's term rider as an option, which would go up to 25,000 or 25 units. And we also have a guaranteed increase option rider. And as I mentioned earlier, we do have our no lapse guarantee feature. So as long as the minimum premium is paid, we will keep that policy in force for 10 years. And we do have the unisex options. So the product can be structured with our 457 plans. Now going over to the loan options with this product, our fixed loans, as many of you may know, fixed loans will decrease the actual accumulation value with this product. The variable loan option is what we really need to focus on here, as variable loans that come out of the product will not actually decrease the accumulation value on this product. So it's very important. And when we go through our illustration here shortly, we are going to only reflect the variable loans. And you can see as those variable loans come out, that accumulation value is still being very aggressive and increasing while income is being poured out of the policy. Now, as it pertains to AG 49, our variable loan rate is at 280 right now. They've had to decrease by at least 50 basis points for illustration purposes to make the product look more, I guess, conservative, if you will. So that's another implication of AG 49, is a decreased variable loan rate compared to what you're used to seeing before. Now, we do have multiple crediting strategies with this product. So just like the premiums, paying the premiums into this product and the frequency and the amount, how that's fully customizable, the crediting strategies on this product are also customizable, meaning you could allocate or participate in any of these strategies as long as it equals 100%. So as many of you may know, fixed rate, pretty self-explanatory. We're at 3.5% right now. Some customers love to have a guaranteed element with their product. And then they would typically put the rest of the premium into a more aggressive strategy with this product. So one thing to really focus on with this AG49 regulation is how it affects the multiplier strategies. And a lot of carriers really focused on these multiplier strategies to push their illustrations and their product because multiplier strategies pre-AG49 made illustrations look so extraordinarily good, and that includes ours. So from an illustration perspective, it is going to make it look less competitive. But the good news is our product, it's still going to be reflected at whatever that value cap strategy cap rate is at 5.92. But the good news is the strategy itself, it's going to stay the same. So it can still perform really well using the multiplier strategies, but from an illustration perspective, it's going to be illustrated at the value cap of 5.92. So what exactly is a value cap, or another fancy term that they use is a benchmark strategy? What exactly is that? Well, basically, it's a strategy that must follow the S&P 500, must have a floor of 0%. It also must have a participation rate of 100%, and it also must credit interest annually. So the value cap for our product would be at 5.92. And here in just a minute, we're going to kind of run through an illustration real quick, and you can see what exactly I mean as far as using a multiplier in a illustration, and it's still following that value cap rate with this. So not to be confusing, but what I'm really trying to say is behind the scenes, these crediting strategies can still perform like they would pre-AG49, but for illustration purposes, it's going to be watered down to where it reflects the value cap. So for those of you that may be unfamiliar with multiplier strategies, let's assume you have a cap of 12%. You're using the 60% multiplier. Multiplier strategies do have a segment asset charge. Our 60% multiplier strategy is at 3.65%. So let's say you have a 10% S&P growth. You see the formula that we use to show what that would generate, which would be 16%. We have a beginning value of 10,000. So you take to get that ending value would be 10,000, and then you see where you would input the actual asset charge and what that 16% crediting rate would be, which would make you come out with 11,177. And that's how you would calculate a positive gain on a multiplier strategy. So it would be 11.77%. Now, if you look at the negatives, you would see, now you can't technically, since these products are protected from stock market volatility, you wouldn't actually go backwards because of the negative 10% in the S&P growth here. You'd actually go negative because you're paying an asset charge of 1.9%, which is why you'd see an ending value kind of going backwards to $9,810. Now, the uncapped strategy, just like the multiplier strategies, the uncapped strategy can perform extraordinarily well, but it is going to be kind of held back due to AG49 on the illustration because it's going to be reflected at that 5.92%. So let's say the S&P in this example goes up by 30%, and we have a spread of 4.75%. We'll just go through the formula here. So you can see how, if you have a really strong year in S&P growth with this strategy, and depending on what the spread is at that time, you could definitely perform very strongly. And you can still do this with AG49. It's just not going to be reflected on the illustration. So kind of behind the scenes, it could still perform huge. And this is just a quick negative example. Basically, since we don't have an asset charge like we do with the multiplier strategies, and we have a negative return here on the S&P, we would just come away with 0% for this uncapped example. Now, who exactly would benefit from an index universal life strategy? Well, pretty obvious it'd be those looking for to build up a huge cash value in their life policy, someone that still wants a death benefit, but they're looking to really maximize on the cash accumulation side of things. The multiplier strategies, although AG 49 is not going to let you quote it like prior, it still can perform really strongly. So that would definitely be a good fit for someone looking to capitalize on the cash value with an index universal life product. Also, anyone that's looking for protection from stock market volatility. So as we saw in our previous crediting strategy option, someone that had a negative 30% on the S&P 500, it's not going to make them go backwards with their cash value on this product like you would see if someone was actually participating in the stock market. Tax-free retirement, in my opinion, this is probably the biggest selling point of this product is the variable loan rate option. With this, that would be tax-free variable loans. I think is probably the hugest, strongest benefit of this product. And also the financial protection. So not only can you utilize the variable loans for tax-free retirement, but you also will have that death benefit option built into the policy as well. Now I'm just going to switch over to our illustration software right quick. And this is our expert illustrator. And this is, anyone will have access to this. If you get appointed with us, you'll have access to your own expert office account where you can actually do electronic applications through this system. You can check on pending business through this system. You can also run illustrations through the system, which is what I'm about to show you. And this dashboard here is just basically, for this example, we're just using a 50-year-old male. For the IUL, and you can see down here where our crediting strategies are. You can see what the rate we're using is 5.92%, which is our value cap strategy. So before AG 49, this would have what the traditional cap rates were with, for example, the 60% multiplier strategy currently has a cap rate of 11.5%, as well as our 24% multiplier strategy. So that would be in there prior to AG 49, but now we're in December. Everything is going to be at 5.92 for illustration purposes. So how do we show an illustration with the variable loans? Well, let's go to, and here's your rate class. So for this example, we'll just use a standard non-nicotine user. And we'll go to strategy defaults and go to max loan. And for the loan type, if you remember, I mean, we could do a fixed or variable, but variable is not going to affect the accumulation value. If we do a fixed loan, it's going to decrease the cash accumulation side of this product. So we definitely want to use a variable loan. And we're rate right now is at 280 is what we're illustrating at. And let's also show income coming out at starting at 65. So if it's set at 65 here, it should show it on the illustration at 66. So now we have that set up. Go to our policy details. And once you select max loan in the software, the death benefit option is automatically going to switch to B to A. So if you remember earlier when we were talking about the death benefit options, option B is the increasing death benefit and A is the level death benefit. So what we want to show is kind of starting out at the minimum death benefit possible, and then the death benefit will increase over time, and then it's going to level out once that income stream starts at 65. And when you run an illustration with our product this way, this is what's really going to show the strongest income. So let's, another thing, I miss this all the time, where it says mode. You want to switch that to, say, monthly EFT for this example. Since we're only paying $1,000, which is a lot, but if we do it monthly, it's really going to show the illustration will run a lot stronger. All right, so I have everything checked. So let's take a look at this illustration. Okay. So this is our typical index universal life illustration. You can see our company financial piece here. Clients really love this piece when they're presented with these. Right here, you will see the death benefit of $255,581. And here, we're showing variable loans coming out starting at age 66, and we're showing about $1,128 monthly for 35 years. And of course, these are derived from illustrated non-guaranteed values, but kind of give you an idea of the type of income that they could expect if they're age 50 and they pay up to $65,000 a month, what they could see as a supplement retirement income. And also, you're going to have a death benefit and all the living benefit riders with this product as well. Now, this living benefit chart here is very important as it pertains to our critical, chronic, and terminal illnesses. Now, the chronic and critical illness, we kind of rank that from slight to severe impairments. Our medical director and our underwriters and actuaries, when a claim is made and that's submitted to American National, we will come back to the client and make an offer of what we think that particular impairment would pay. And you can kind of see here for the chronic and critical illnesses based on attained age, what you can see. So if you have a severe, for example, severe chronic or critical illness at age 60, about 304,000. Minor, 123,000. General rule of thumb for a terminal illness, you're looking at around 90% of whatever that death benefit is. That's if death is expected within 24 months, that'll yield the highest payout. But that chart kind of gives you an example of kind of what to expect if you were to fall into one of those categories for the chronic and critical illnesses. And there's also another chart at the last page of this quote that really kind of highlights the importance of these living benefit riders. Okay, let's scroll down here. This is just basically outlining all the details of this policy and talking about assets, like the charges, and like here are the expense charges for this as well. This is on page 7, so you can kind of see what all the charges are in the background with this product. It's not a lot. Again, also the living benefits are free with this. And if we scroll down, trying to get to the ledger page, and this left-hand column here is our guaranteed column. And when I say guaranteed, and this is a product tied to the S&P 500. When I think of guaranteed, I always say, yeah, this is like the worst case scenario. Like if your product just performs really badly and the S&P does nothing, which it will, and I'll prove that in a second. But with the guaranteed column, I look at the worst case scenario. Then you have the two columns to the right are your more realistic scenarios. And this middle column is reflecting 3.5%, and the far right column is reflecting 5.92% all the way through, which is more realistic in the long run of how this product can perform if you look at the S&P historicals. And you get through here, and you can see from the distributions from this policy at 13,539, and this is on an annual basis. And as I said before, this far left-hand column, the worst case scenario coverage ends at 71. And down here, age 80 at the 3.5%. And if you look over here, reflecting the 5.92% of what we're illustrating, it performs all the way through. Now, why do I think that's more accurate? Well, again, we're looking at the S&P 500 with this product. And if you look at this S&P historical ledger, and this is a very useful tool when you're speaking to your customer, is if you look at the S&P 500 performance dating back to 2000 all the way to 2019, and you compare it to our different crediting strategies with this product, you will be able to see what the actual yields would be. So with the 60% multiplier, based on the last 20 years of the S&P, it would perform at about 5.94%. The 24% multiplier around 5.72%. Our traditional point-to-point, 5.36. And I'm sorry, this is the no cap strategy. And then if you look at the cap strategy, 5.43. So definitely strong overall. And since this is the performance of this product is based on the S&P 500, I think it's a pretty fair indicator of how this product would perform in the long run. But again, we can't predict the future. We can't see like, okay, well, I think the product's going to perform this way. We can't look in the future, but we can look at the past and at the history of the S&P, and it'll kind of give you a good idea of what to actually expect for this product's performance. And this is the Living Accelerated Benefit Rider summary. Kind of gives a more detailed explanation on how these living benefit riders work and what to expect if you were to fall ill or trigger one of these chronic or critical illnesses. I know with the critical illness we have about 16 triggers, which would let the client have access to one of these. Chronic illness is the ability to perform 2 of the 6 ADLs, or activities of daily living. So we have a really in-depth underwriting guide on our website, which is www.img.anicaweb.com, that really outlines all the different illnesses that could trigger these living benefit riders. But more importantly, I mean, these are on this policy for free, so you have the ability to generate a tax-free retirement, have a death benefit, as well as have living benefit riders with this product as well. So there's a lot to be excited about with this product. I do know later on in 2021, I think hopefully in the first quarter of next year, we're going to launch a guaranteed IUL product, which is going to be really exciting to have like a guaranteed death benefit feature with the ability to generate a tax-free income I think that would be huge for us, but we are, more information to come on that as it pertains to the release date and things of that nature. But with that being said, we also have multiple underwriting programs with our products. We do have an express underwriting program for $249,999 and below. Standard, you have to be a standard or below underwriting class. Our preferred underwriting classes are not available under this ban. Issue ages 0 to 65. We will run an MIB and script check in-house, and if those are green lighted, then you're looking at a no exam. Now, if you want to go with the bigger face amounts and the preferred and preferred plus rate classes, they can qualify for our Express Plus program, which is pretty much the same criteria. MIB script check in-house. If those look good, then you're looking at a no exam. But it does have to be submitted through our electronic expert office platform, which you would have access to after you get appointed. So you do have to submit it through our expert office platform to qualify for Express Plus, but it still is an option. We also will have some incentive programs coming out after Christmas that I'll let Tony know about, which are always pretty awesome events to earn some extra income when you write with us. So definitely something else to keep a lookout for. And with that question, or with that, I'll pass it over to Tony and see if there's any questions.
All right, give me just a second to switch this back over to me. All right. All right, do you see my screen?
I can.
All right, perfect. Okay. So with that, have a few polling questions I want to present to everybody. First polling question that I have is if you would like more information in regards to the topic that we discussed today, I'm launching that question. Please go ahead and respond. I'll make sure to get additional information out to you. I'll leave this up for a few moments. Looks like we've got a lot of people wanting more information, so that's always good.
Fantastic.
Okay, looks like we're done voting there. I'll close that one out. Next polling question, if you're not appointed with American National and you would like to get appointed, I've got a polling question there. Just respond. If you are looking to get appointed, make sure we'll get that appointment paperwork out to you, get you taken care of. I'll leave this up for a few more seconds. All right, and I'm going to go ahead and close that out. And then, Mike, we do have a question.
Okay, great.
All right. All right. All right, first question. Let me make sure I got it to the top here. Yep. Is historical rate including the caps and the multipliers?
Yes. Are you talking about, is it pertaining to that page on the illustration?
I'm assuming so.
Yeah. So that's just reflecting how those strategies would perform for the last 20 years for each year. It's like an overall yield.
Okay. Then I have another question, charges. I'm not sure what they're referring to on that. If you could be more specific before we end the webinar in regards to what charges you're referring to, definitely try and get that answered for you. Okay. What are the fixed rates and loan charges?
The fixed rate on the product is 3.5%, and the loan charges, is that pertaining to the variable loan rate?
Yep, I'm assuming so, yes.
Okay, we're showing 2.8%.
Okay. Okay. Are collateral assignments allowed for banks being beneficiary?
Yes. There's a form on our website specifically for collateral loan assignments that will need to supplement the application, though.
Okay. All right. And then last question, how does American National's performance in the marketplace compare to other carriers such as they have here, Allianz, Pac Life, and Emeritus?
Yeah, so I think we're in a very strong position right now. Just primarily, I mean, we have these multiplier strategies that we put out early last year, and it was really to go toe to toe with these other carriers that really focus heavily on these multiplier strategies to
Mhm.
promote their product and to make these illustrations look so lucrative. With AG49 coming through, it kind of puts a machete to those multiplier strategies as far as illustration purposes and things like that. Um, so the carriers that really focused on these multiplier strategies, it really kind of hamstrings them. So it really kind of puts makes us, I think, more of a level playing field. Although the multiplier strategies that we had made the illustrations look really good. So I mean, I think we're one of the top carriers you could look at as far as the product performance as well as the features that come with our product. I mean, with living benefit riders and the technology that we have. So.
And correct me if I'm wrong, in more layman's terms for everyone, as far as AG49, and when we're talking about illustrations and presenting that to the client, with that, it's just more or less having the carriers illustrated from a more, how should I say, I don't want to say conservative, but from the perspective that's more realistic. So you don't have
Mhm.
those illustrations that are out there with these percentages that really are not being obtained. Would that be a fair statement?
Yeah, I think that's a perfect way to explain it. I mean, when I look at AG49, it's just basically making the illustration look as conservative as possible and as realistic as possible. They don't want to. They want to make it where, like, hey, this is more reasonable of what to expect from this compared to this, which it's probably not going to happen.
Right.
So that's what AG49 is, and it kind of just levels out the playing field really as far as illustrating these products are concerned. But you know, the good news is though, those those multiplier strategies on our product, you can still use those, and those big returns. I mean, it's still possible. It's just going to be illustrated at that more conservative 5.92% rate, and that's what the policy will be issued with. But it doesn't mean it can't still perform really aggressively with these strategies. So, I mean, that's the good news. I mean, our product as a whole hasn't changed. I mean, the crediting strategies are the same. It's just how the product's illustrated
Okay.
is what's affected.
Okay. Got a couple other questions that I can address after the webinar. So those of you that had the questions that I haven't had an opportunity to have Mike or myself answer, I will address those after the webinar. So do have
Okay.
one final because we're close to our time here. Do have one final polling question. So based on the information that we've provided, if you have any clients that you're seeing Index Universal Life would be a good fit, go ahead and respond to this polling question. Definitely reach out to you and see what we can do in terms of getting an illustration out to you. I'll leave this up for just a little bit. Make sure I give people enough time to respond. Okay, I'll close that out. All right, lastly, any additional questions post a webinar, you can reach out to me. As you see here, here's my contact information. It's tony@IAMSinc.com. Justin Ford is one of our new life sales directors. His email address is justin@IAMSinc.com. And then we also have Jess Riley, and his email is Jess, Jesse. It is Jess, not Jesse, at IAMSinc.com. Our 800 number is available here at the bottom of the screen along with our web address. Also, for additional content such as this, we do have, you can either follow or like us on Facebook or LinkedIn. My LinkedIn personal page is on here as well, the link to that, but definitely check us out on LinkedIn. To follow us, like us on Facebook. We do provide content such as this on those pages. What we like to do is make sure that we're getting out content to you, the agent, to help you grow your business. So with that, Mike, I want to thank you for joining us on the webinar. What we have, like 3.5 days of shopping before Christmas. So those of you that have joined, appreciate it. Mike, any final thoughts, any final words?
Yeah, just get that Amazon Prime membership. Get it. You don't have a lot of time left, so. But no, I hope I explained AG49 really well and the effects it's going to have on, that's not our product, but everyone else's product. I mean, if you have any more questions, I would love to go further into that. But the most part, I mean, the product stays the same. It's just how the product's illustrated, and the variable loan rate's going to be decreased. So, not a whole lot to be paranoid about, to be honest. But it's still something to be mindful of when you're presenting illustrations to people. So if you have any questions, please feel free to reach out to Tony or myself, and I'll be happy to address those for you. And thank you again for taking time out today to talk about our IUL, and I hope everyone has a great holiday.
Yep, I would, let's get that out of there. Yep, I would concur. Everyone have a happy and safe holiday, and we look forward to growing your business here in the new year. Take care, everyone.
Thank you.